You are on the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 250,000 reputation points. And what I love the most is sharing educational breakdowns that show you how you can be looking for the best trading opportunities in the market. So without further ado, let's go and see which is today's forex pair that we need to break down. Today, I want to speak about gold, probably the most famous commodity. And why do I want to speak about gold? Because it is very near to providing to us a good trading opportunity. So I want to give you guys a full breakdown of the situation that we currently have to show you where we can be looking for the next potential setup. And as usual, I will be keeping this analysis as educational as possible. So first, we will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are doing in the market. And by the end of the video, by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we have the highest probability setup here on gold. Now, starting here from the monthly time frame, what do we have? Now here in the monthly, we have a market which has just provided a nice M pattern. Now, generally speaking, after the creation of an M pattern, what you expect is for the market to provide a nice move to the upside to go and complete the pattern at the previous support turned resistance. So here in the monthly time frame, it is quite clear that we did expect the market to provide this nice move to the upside to complete the pattern exactly at this level. So here in the monthly, everything is quite clear. We did expect a move to the upside, and that is in fact exactly what the market just did. However, as you know, in the market, previous support, once it is broken to the downside, it is turned resistance, meaning that at the moment, we are actually testing strong resistance, meaning that we can expect the market to provide a rejection to the downside, at least from a monthly perspective. We can also notice that we actually have an impulse and a correction. And generally speaking, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And if we do that, we can see how the 0.382 of the Fibonacci taken on the monthly impulse is currently lining up with this previous support turned resistance, creating a confluence of resistance at this area that we do expect the market to reject to the downside. Going down on the weekly time frame, what do we have? Now here on the weekly, we can see how the market at the moment is starting to create this W formation. Now, generally speaking, after the creation of a W, what you expect is for the market to provide a move to the downside to go and complete the pattern at the previous resistance turned support. So here on the weekly time frame, we do expect the market to provide a nice move to the downside to complete the pattern at this previous resistance turned support. So everything at the moment is quite clear. Monthly seems quite bearish as we are testing resistance. On the weekly, we have the W formation, which is a bearish pattern, at least to the completion at the neckline. Then yes, we do expect more continuation to the upside. And let's go and see what we have on the daily. Just a quick thing, for more educational breakdowns, make sure you subscribe to the channel and hit the bell. Now on the daily, we can see that as well we have a bearish pattern. In fact, we can notice how the market at the moment has just provided this overextended W formation. And generally speaking, after the creation of an overextended W formation, you want to see the market create a correction to complete the pattern at the previous resistance turned support. So also here on the daily, everything seems quite bearish for a potential move to the downside. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are doing in the market, what we can see is that with the last report on gold, hedge funds have been adding quite a lot of longs, 12.2k long positions, and closed 9.7k shorts, which obviously explains why gold has been making the move to the upside, because from an institutional perspective, big players in the market are actually longing at the moment gold. However, there is a very important thing to notice. At the moment, we still are quite low in net positioning. In fact, we went from having 279k net positions all the way down to having 189k net positions. So we still haven't recovered what we had here, actually far from that. So we can still expect some short-term weakness on gold, because as we have already seen also from a technical perspective, it is quite probable that we will see a correction back to retest this previous resistance turn support here on the daily time frame, and monthly and weekly are showing similar scenarios. So how we will be approaching this potential shorting opportunity here on gold with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data are the best timeframes from a directional perspective. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the upside. And we will be waiting for the market to shift from a 4-hour and lower bullish market as we have right now, to a 4-hour and lower bearish market. And only after the market will shift from an intraday bullish to an intraday bearish market, only at that point, we will be adding gold to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to complete the pattern at this previous resistance, now turn support here from a daily perspective. If you enjoyed the video, make sure that you smash that like button and comment below. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. In fact, every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And we also have a daily Q&A session in which I answer all your questions. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.